All right. Good afternoon. Welcome back here to Trader Minute. Great to have you aboard. We have not seen this type of action in a long time in terms of some of the volumes that are coming in. In fact, we just had a minute with 35,000 volume. 35,000 volume. That is absolute monster volume here on it. And what's absolutely incredible here is we're seeing this action, and the VIX is only up 3.5%. That is, yes, it's a big change from where it was, but it tells you how much absolute uncertainty went into this meeting. And yes, the VIX could still rise, and we could still see more fireworks here, and I expect we will. But this is one where market's not getting a whole lot from Powell. Basically, Powell is telling the market something that the market doesn't believe. And the way the market looks at the economy, the way the market is looking at some of the dangers, it does not look as if Powell is very acknowledging to that. Is one of those things where he looks pretty set in his ways, not kind of like what he was over the last couple weeks, and that's that's sending some selling pressure into the market for sure. And we've now kind of had our initial leg down. Little rebound here by a little, I mean 30 points, right? That's how much it was. And then 90 point drop here. And in 2 minutes, we've bounced, 10 points. So there's going to be some more continued volatility here. And 35,000 on S&P futures. Been a long time since we've seen that. I'm coming in and looking at Bank of America here. With that volume, you can see these options, these Bank of America options before the Fed were $1.30, and they've been cut in half here. They've been absolutely just cut in half right here. I apologize. It sounds like I'm getting some audio feedback. There we go. All right, so they've been cut in half here, but you'll notice Bank of America is not down all that much, right? And I find it very interesting some of the ways that different things are moving with the Fed here. Overall, it's just a net sell everything, right? That's the overall effect. It's a lot of index selling, so things are moving to equal degrees based on index weights and all of that. So there's not a whole lot of major differentiation that's happening out there with that index selling. But stuff that was sharply in the green, things like GM. GM was up very nicely. You'll notice it's gone red. Now you'll notice it looks exactly like the market, right? I mean, I could just put up the ES chart, S&P futures chart, looks almost identical, right? And a lot of things, that's where they are here this afternoon. They look identical to the market, so there's not a lot of differentiation where you can look and you can say, well, this is a little different, that's a little different. Basically, if you want to bet the market's going down, you can buy puts on pretty much anything. If you want to bet a rally, you can buy calls on pretty much anything. But one of the things that's going to happen is the call values are not going to appreciate very much unless there's enough move on the delta to counteract. I think the way the VIX looks here and the VXX look here, barely being higher on both, I think that tells you what's going to happen in the future, and that's going to be a volatility compression. That yes, the market may go lower, all of that, but we are going to have a pretty monster volatility compression. Now, I've looked at the pricing on these; it's ridiculous. The Vega here, the implied volatility here is almost 80%. I mean, that's just ridiculous here when it comes down to it. I just can't pull the trigger on something like that. This week's implied volatility is 92%. It's just monster, and it deserves to be so with how much movement, how much kind of just fast, quick movements out there. But it's very hefty. Been watching some of the stocks that kind of gave some nice little bullish notions yesterday to see how they're holding up. Things like a Boeing, and it's just not. It's just not. Things like a American Airlines, and just not holding up. Something like a even yesterday a General Electric, which we talked about. This one's holding up. Go figure. General Electric, but still way off of its highs here. And that's pretty much the landscape with with everything. Now, we have not had a lot of big bottoming volume, big markers, but the market did put in a marker right here. It put in a marker here, 2490 to 2500. Yep, you could go trade off of it, and I'm not going to do it with the implied volatilities here. But if we kind of back on out and we put this on a 1 hour chart, take a look at the volume here in this last hour. It is greater than any volume we've had in a 1 hour period over the last 3 weeks. And we're not even, we're not even into the last hour, right? Normally it's the last hour that has the highest volume. This volume on this hour was absolutely one of the biggest volume hours that we have seen. So for those looking for a bottom, here you have a little bit of a line in the sand. Here you have the market finally showing with a little bit of volume, hey, you know what? We're at least coming back to this level. This level may free fall and break through, right? That is a risk that's out there. But we're at least coming back to this level when it is all said and done. And, I suspect we may see a little bit of, consolidation around this level overall. But, it is one that could easily be retested. And on a retest, very, very buyable there with it. So anyway, that's that's the first dynamic change that we have seen here today, that we have seen in weeks, where we get a really big volume factor come into play. I think you can go and buy some things out there, but I think it's best served buying with stock. Not with options, given where the implied volatilities are. But it's one where generally you get the bottoming move, then the secondary move. You get all the implied volatilities kind of wash out, and get a chance to really kind of get in there. One area that's not really bouncing here with the market that really got taken down. These things like a U.S. Steel, continuing to just grind lower. Halliburton, and I know they're not both oil names, but they trade together. They have traded together for a long time. But here you have Halliburton trading under 28. And tomorrow we'll go look at the fundamentals on these things. But Halliburton under 28 is incredibly cheap. And still cannot find a bid. Can't find a buyer out there. Schlumberger the same way. Despite being incredibly cheap, they just cannot find buyers here. Market has rallied 40 points since that 35K volume. This is a 40-point rally right here. 30-point rally right here. In 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes, 30-point rally. We've seen bigger than that, before, but not too much bigger than that. You have to kind of go back to some flash crash days, and to see this type of heavy movement per tick type of thing. But this is the first time we've seen this volume element. And if you're heavily short the market, aggressively short the market short term, this is where you pull out. This is where you say, okay, enough's enough, thank you. You declare your victory and you move on. If you're long, You have to figure out how do you want to get exposure, right? And that's kind of where I'm sitting. I'm sitting going, okay, how do I want to get exposure? I had exposure with Facebook, and the news blew my Facebook up today. It blew it up, and, it's got about $300 worth of value. Okay, what do I want to do with that? I may take that by the close. I haven't decided here just yet. But you look at something like a Microsoft, right here at the 200-day moving average. And, with some positive divergences in some of the momentum oscillators. Now, we've seen stocks like this that have kind of come down to their 200-day moving average, have kind of sat there, and they've blown on through. Right? They've just busted on through. But Microsoft hasn't been one of them. It's been holding up, fairly well. Here's Caterpillar. The market's down huge today. Down 40 points. Caterpillar kind of holding up. We see even Bank of America kind of holding up, right? But bottom line, if you're bullish and you want to get the best value in terms of options, there's a risk you kind of have to take. You kind of have to take a risk that tomorrow a gap up is not too severe. That it's just not too severe. Not saying the market's going to gap up. But if you're bullish with where option values are, right? If you're going to trade options, short-term options, you have to hope it's not too severe of a gap up tomorrow. If it's not, what's going to happen in the first 30 minutes on a gap up is those option values are going to compress, and they're going to compress very, very quickly, especially if it's a gap up and kind of just sits there for 20, 30 minutes. Implied volatilities on things like Bank of America, right, are going to go from 42. They're going to cut down to 33, 34. They're going to be cut pretty dramatically, right? And we'll see that, not just with this week's options, but next week's options. We will see the implied volatilities really cut on down in that scenario. And I think from a bullish standpoint, that's kind of how you have to look at this right now, bullish option trader standpoint. And that's how I'm looking at it. And I do think if we gap up tomorrow, depending on where and why, I think there could be a serious relief rally. By serious relief rally, I'm not talking about, the market's up 20 points in the morning. I'm talking about that type of rally that takes and retraces the selling that has been, right? So, if we, looking at the market retracing, this drop and coming up here into the 2620 to 2680 area. We talked about some of the volumes, some of the heavier volumes that took place right in this level, and that this level would likely be revisited at some point. I think if you're looking for that revisit, a gap up tomorrow kind of gives you a way to play off of that, because you can use today's lows as a fairly decent stopping point for it. But with where they are, where things are, I don't have any bullish signals. I think it's still just you're buying oversold, and it is something where you might get paid off, but even options aren't going to pay off all that well. If the implied volatilities compress there. We're going to hear a lot of news. We're going to hear a lot of chatter about the yield curve tonight. We're going to hear a lot of chatter about death crosses, because one of the things that's taking place with the indexes out there, if you take a look at something like the INDU or the Dow Jones Industrial Average, and you pull it up in terms of 50 and 200-day moving averages, you can see the 50-day moving average pushing below the 200-day moving average. I've been putting together a little bit of data here on that today, and I'll share that with you tomorrow in terms of the tendencies when this happens, because the name death cross, is quite scary. Is one of those things where implies something strongly bearish. You can see we had a death cross here in the S&P. Happened earlier this month. We had a death cross here in the IWM that happened in November. So, there are different indexes doing different things, but we have the death cross getting into the Dow. That's when you tend to start to see it hitting the news and hitting the news pretty aggressively overall. Sorry, I just saw something come in here. Powell commenting on some of the angst of the market here. Yeah, he basically says nothing they can do about it, huh? Yeah, so, yeah, Powell's not really giving a whole lot for the bulls. The bulls here, their argument's oversold, and volatilities aren't skyrocketing today. That's not exactly a real kosher, real comfy position here for bulls. And, but the bulls do have the one big change here, and that is the volume that has come in at this level since I've gotten on video, that we have seen come in here at this 2490 level here on S&P futures. And it'd be nice to see it retested. And confirmed. And I think if we do see that, it is something where the bulls might be able to actually get pretty aggressive if we see that scenario. Thanks for hopping on. Have yourselves a great one, and we will talk to you later. Take care.